This is what not having a trading journal can do to you. A big, fat, red day. And you have no idea how to turn this into a green month just by getting feedbacks and going through my trading journal. Hi, what's up everybody? This is David. In today's video, I'm going to share with you how I turned a red month, 2 consecutive red months into a 1.5 green consecutive month. So I once read a book by Dr. Alexander Elder, and he mentioned that if you give me a trader who writes trading journal and versus someone who doesn't, you can actually easily tell if the trader will make money in the long run. So it actually does make sense that if you want to stay profitable and thrive in this trading industry, you really do have to make a daily journal of your chart and why you go in entry and exit. This Excel sheet that you're looking here right now was actually inspired by one of Timothy's students. Go back. Yeah, basically Jack Kellogg and this guy. Basically they did a daily journal. They did an Excel sheet. They explained what they did and the returns and what went wrong. So I thought maybe I'll follow this. So in the first month that I did for March, I actually lost badly, as you can see from the numbers here. But those big green days are my investment that I held for a pretty long time. But those red days are mostly my day trading activities. So as you can see, for the month of March this year, I've actually made a pathetic amount of negative $38.78. And for the month of April, this is how much I've lost. So the monthly, this is my biggest losses. If you know how to calculate average percentage gain or average net gain, please leave your answers in the comments below so that I can, because I do not know how to. So for the month of April, I actually lost $265 because I made some stupid decision and I was having FOMO and all. But this is where everything changed, because I show you what I did for each trade. So this is April 30th. Okay, so basically I review all the trades that I did with some Google Sheets calculation. It helps me to understand what did I do wrong. Like for this, where I'll jump in at the high of this market open and without knowing that there is a pre-market high, and then just went in. So having a trading journal that you can consistently take note and review, it's a pretty darn way to assess how you are. I'll show you what has helped me the most. Okay, so for the month of May, as you can see, I still have losing days, but they are not as big as this is a compilation of the meme stock AMC and BB. So as you can see, my green days aren't that impressive also, but I'm being lucky where I have some meme stock to help me. So but overall, I'm still profitable for the day, for the month of May. So I'm not sure whether having this Excel sheet helps me, but it does show some improvement. Let's say I take this May 27. See, AMC stock is one of the meme stock that I traded. CLF, so we'll do some review on it. Some of the stocks that I hold for 2 or 3 days. So something miraculously happens. Once I start identifying those trades that actually make me lose money, I stop doing that. I do not take note of what action I take. I do not take note of the actions that I took to make money. I only take notes of the actions that I took that make me lose money. And this has helped me significantly in my downline, which, as you can see, for the mid-month of June, I actually made this much money. So it's pretty to have a trading journal. It actually helps you review what action that you take that consistently make you lose money. Like for these 2 days, 15 and 16, having good days consecutively, that I got a bit elated and arrogant. So I took any trade that kills my bottom, like for the month for this 16th of June. So I was lazy, I didn't use the 5-minute chart, because I usually lower my risk by using the 5-minute chart. See, between the ticker HP, I choose blade, but on the hourly chart it already stretched pretty thin, GOEV, I didn't wait for break of the resistance and based on entry. So most of my entries, if I enter, is because of the higher time frame. So as you can see, this is why you should have a trading journal. And this is also why you should incorporate your trading journal into Google Sheets or Excel sheet, whichever you can use it on the go. I would highly recommend using Google Sheets. And if you do not know how to use Google Sheets, you can check some of my videos where I highlighted some of the formulas that I use for like the average wins, how I use average wins, how I use the formula average if, semicolon, and arrays and all, and the profits like max profit and minimum. So actually learning how to use Google Sheets to code to identify your winning days and losing days helps you to narrow down the hole in the bucket. So imagine if, let's say, you have a bucket full of water, 1 liter, it's leaking every day. I don't think it can last you pretty long. So but if you have a bucket that is not leaking at all, you can use it again and again, having twice the effort to keep it full. So this is how a trading journal keeps you in check, especially if, let's say, you suddenly find out you get bored. If you have 1 losing day, it's okay, but you have 2 losing days, then this is a red alert already. It tells you that first, you either have to take a step back or you have to go back to your strategy. This is my strategy for every day, like gap up, wait for pullback, previous day dip, If this video gained traction and if you like what I shared, I might share my strategy for how I turn a 2 consecutive red month to 1.5 green month. Okay, I'm supposed to say this, wait. Okay, if you like what I've shared, if you like this video, please hit the like button. And if you're new to this channel where I shared my experience with Google Sheets and trading the US stock market, please subscribe. Thank you very much. I'll catch you on my next video. Trade awesome. Bye.